patiently waiting for bad economic news, which would be good. Hey, it's Eric Osses here with Homebridge Financial with my weekly update on mortgage rates, the economy for the week ending February 24, 2024. Well, any of you have listened to me over the years have heard me say probably many times that mortgage rates are driven by the bond market, and the bond market is driven by fear of inflation. And for the past year, the Fed has been increasing short-term rates in an attempt to control that inflation, which got out of hand over the last couple of years since the start of COVID. This week, we didn't get great news for the bond market. We got good news for the economy, but the PCE, Personal Consumption Expenditures Index, surprised us, coming in stronger than anticipated at 5.4%. The core rate, which strips out volatile food and energy, was also up about 0.6%, hotter than expectations. Looking deeper into that report, personal income, part of that component, rose 0.6% in January, and spending rose a whopping 1.8%. Hotter retail sales may have increased in part because of COLA adjustments, cost of living adjustments, that took place in January, where everybody on Social Security got a 9% raise. Well, what does this mean? Well, the bond market has been waiting for bad news, signs of the economy slowing and most likely dipping into recession. Bad news will ease inflation pressures and mortgage rates will fall. But that hasn't happened yet. And with January's stronger inflation and higher spending numbers, the Fed is sure to hike rates again at their meeting in March. It's March 21st and 22nd, probably by 0.5%. So we're still waiting for that bad news to happen, which will eventually drive mortgage rates lower. So for the week, where are we at on mortgage rates? Well, here's the national averages. Conventional 30-year fixed rate, 6.88%, up a little bit, about 0.08 from last week. A 15-year fixed rate, conventional, 6.25, up about 0.3 from a week ago. FHA and VA 30-year fixed rate, 6.35 to 6.4, up almost 0.25% from a week ago. 30-year fixed rate jumbo, 6.42%, up 0.17. 5/1 ARMs, 6.6%. And again, I've said that before. I don't put a ton of emphasis on that 5/1 ARM because we have some other programs that have better rates than that. How about some good news? Mortgage rates did just get less expensive for many first-time home buyers and for our veterans. Our industry averages over 120 loan rule changes every month. Most of those changes are pretty mundane. It's not often that we get good news, but we got some this week that many of our clients are going to benefit from. So let's do a real quick rundown of that. If you are a first-time home buyer, and if your income is less than 120% of the average median income for your area, in King, Pierce, and Snohomish counties of Washington, that's $149,250, loan level pricing adjustments are waived on conventional loans. What's a loan level pricing adjustment? These are things that add to the rate for a client based on your credit score, based on your debt to income ratio, the amount of the down payment. There's quite a few factors that come into play on that. And if you have a situation where you have a lower credit score and you have a high debt to income ratio, for example, it can really impact the cost of your loan. So if you're at or below 149,250 in income, this is huge news. You could see your interest rate as much as 0.5% lower than before this adjustment. And if you're an FHA borrower, the cost of your mortgage insurance, monthly mortgage insurance, got reduced by 0.3% from 0.55 down to about 0.8, or down to from 0.85 down to 0.55%. On a $500,000 loan, that would save you about $125 a month off of your mortgage payment. Another significant change. And if you're a veteran, or if you're the surviving spouse of a veteran that we lost in combat, your VA benefits are also less expensive. The cost of the VA funding fee was reduced by 0.15%, and that went down to 2.15 from 2.3%. On a $500,000 mortgage, that would save you $750. So this is all really good news that we finally got this week, and I'm so happy to be able to share that. If you're interested in learning more about those changes, be sure and reach out. You can call me 206-915-3742. Email me, Eric at ericismybanker.com. Or you can check me out on social media. Just look for Eric is my banker. If you're looking at this on YouTube, be sure and subscribe so you get my weekly updates every single week. And if you are a first-time home buyer and want to learn more about special financing programs, including zero down loan programs, well, then you should take my class. We've got 2 classes coming up. One of them is just a week from now, Saturday, March 4th in Tacoma, Washington. That's going to run from 9:30 a.m. until 2:30 p.m. We'll feed you. And we also have one coming up Saturday, April 29th in West Seattle at the Youngstown Cultural Arts Center. That'll run also from 9:30 a.m. to 2:30 p.m. And to reserve your space, just reach out. You, again, call me 206-915-3742. That's 206-915-ERIC. Email me, Eric at ericismybanker.com. These homebuyer classes workshops are sponsored by the Washington State Housing Finance Commission. They also satisfy the homebuyer education requirements that you have to do for any first-time buyer or zero down loan program. So reserve your space. Be sure and check in now. Space is limited. And in the meantime, I'll be available to answer any of your special story problems or financing questions, mortgage questions. Just reach out and I'll be here. That's all I've got for this week. I hope you have a great weekend, and I'll talk to you next week.